Most traders make price action way more complicated than it needs to be. They have 14 indicators, 7 confirmations, 3 Telegram groups, and somehow still cannot decide whether to buy or sell. Meanwhile, some traders are making money using nothing more than a clean chart and a few basic concepts. So in this video, I'm going to explain price action in the simplest way possible, including support and resistance, breakouts, trend lines, candlestick patterns, ranges, supply and demand, and market structure. And by the end, you will understand why price action is still one of the most powerful ways to trade. Price action is basically reading the market without relying too much on indicators. Instead of waiting for an indicator to tell you what happened 10 candles ago, you are looking directly at price itself. You are asking simple questions. Where is price reacting? Where are buyers stepping in? Where are sellers stepping in? Is the market trending, ranging, or reversing? That is price action. Let us start with support and resistance. Support is an area where price keeps bouncing up. Resistance is an area where price keeps getting rejected. If you look at a chart and see price hitting the same area multiple times and reacting, that area matters. The mistake traders make is drawing support and resistance as one exact line. In reality, support and resistance are zones. Price can move slightly above or below before reacting. Now let us talk about breakout and retest. A breakout happens when price moves strongly above resistance or below support. But the smart traders do not always jump in immediately. They often wait for price to come back and retest that broken level. For example, if resistance breaks and price comes back to test it from above, that old resistance can become new support. That retest is often where the better entry is. Market structure is one of the most important concepts in price action. If price keeps making higher highs and higher lows, the market is bullish. If price keeps making lower highs and lower lows, the market is bearish. That sounds basic, but you would be surprised how many traders try to sell in an uptrend or buy in a downtrend. A lot of losing trades happen simply because people are trading against the overall structure. Candlestick patterns can also help you understand what is happening. For example, a bullish engulfing candle can show buyers are taking control. A bearish engulfing candle can show sellers are stepping in. Pin bars can show rejection. Dojis can show indecision. But candlestick patterns work best when combined with levels. A bullish engulfing candle in the middle of nowhere is not very useful. A bullish engulfing candle at strong support is much more interesting. Trend lines are another simple tool. In an uptrend, you can connect higher lows. In a downtrend, you can connect lower highs. Trend lines help you see where price has been respecting direction, but do not force them. Some traders draw trend lines through every candle on the chart until it looks like modern art. Keep it simple. Sometimes the market is not trending at all. Sometimes price is just moving between support and resistance. That is called a range. When the market is ranging, traders often buy near the bottom of the range and sell near the top. The mistake is trying to trend trade in a market that is clearly moving sideways. Supply and demand is similar to support and resistance, but with more focus on strong moves. A demand zone is an area where price moved up aggressively before. A supply zone is an area where price dropped aggressively before. The idea is that if price returns to those zones, buyers or sellers may still be there. This is where many smart money concepts traders start overcomplicating things. At the end of the day, supply and demand is still just looking for areas where price reacted strongly before. The best price action traders do not rely on one thing. They combine multiple ideas. For example, you see the market is in an uptrend. Price pulls back to support. That support also lines up with the trend line. Then you see a bullish candlestick pattern. That is a much stronger trade idea than just randomly buying because one candle looked nice. The reason price action works is because it is based on what traders are actually doing in the market. It is not magic. It is not a secret strategy. It is just understanding where buyers and sellers are likely to react. If you want to become a better trader, stop looking for the perfect indicator and start learning how price moves. If you enjoyed this video, subscribe to the channel because I am going to keep breaking down trading concepts in a way that actually makes sense. And check the description because I will put useful resources there like charting tools, free education resources, and trading templates that can help you improve without all the fake guru nonsense.